Ladies and gentlemen, welcome back to the channel. The markets hit a new all-time high today. Jerome Powell's potentially getting fired, or at least investigated by Congress. Yeah, this is crazy, unprecedented from a Fed chair. We'll discuss it here in this video. On top of that, we do have a trade deal officially confirmed and announced with Vietnam, which is actually very important because the Southeast Asian region, China, Vietnam, Malaysia, Cambodia, like all of those countries that do a lot of our manufacturing for more simple things like clothes and simpler products, they actually do a lot of that manufacturing. Like Nikes, look at Nike clothes, 9 times out of 10, they're made in Vietnam, right? This was actually a pretty big trade deal to get resolved. So we have a lot of news to get into. Goldman Sachs says we're going to miss on the jobs report coming tomorrow. We have jobs report, initial jobless claims. You have a speech from Fed Bostic, ISM services, PMIs, all kinds of different things. Hit that like button and subscribe to the channel if you have not done so already, and let's get started. But before we get started, if you guys want to come trade with us live in real time, check out that link down below in the description of this video. There is no other community in the world like the one that we are developing. Let me just tell you right now, because what we are specializing in is taking a medium-term time horizon on our investments. What we're investing in, for the most part, is small cap AI stocks that are great companies with great qualities that are underlooked. Why are they underlooked? Because a lot of Wall Street cannot invest in sub-$1 billion, sub-$2 billion, sub-$5 billion companies. Unless retail knows about them, they don't get a lot of attention. That is where the opportunity truly is. Because if you can find those good companies that are just not known, at least not known of yet, you can, I believe, dramatically lower the risk profile while getting the opportunity to make massive upside gains. For an example, Apple has a low risk profile, but everyone knows about Apple. You're not going to find something new about Apple that somebody else doesn't already know about. Apple's also not going to go up 10x in a year, okay? Small caps, they can give you that 10x opportunity. A lot of the times they're very risky. If you can say, hey, this company is trading at XYZ valuation compared to its peers, significantly undervalued. It's in the AI field. Management is, smart. They're involved. They're invested in the company, and they're disrupting XYZ industry that has a total addressable market of $1 trillion, let's say. I can confidently say, doing the due diligence, that that company is probably less risky than what a typical 10x opportunity risk profile would look like. I know it's complicated, but that is the kind of work that we are doing. One company in particular is already up 50% in like the 10 days we've been invested in this stock, and it's just getting started. Literally, the CEO himself said, hey, if the stock is this level in August, once he has the ability to buy shares on the open market, he is going to go out and buy a crap ton of his own stock because Wall Street's getting it wrong. Like, incredible work we're doing. Check it out. Link down below in the description of this video. But with that said, let's get started. China calls for developed nations to liberalize trade. Allspring's Michael Bird tells the Wall Street Journal that July is likely too soon to see a Fed cut. He says, quote, it would take a lot of negative data for the Fed to move now, he says. Futures markets agree, though the odds of a July cut rose to 25% after the weak ADP payroll data. That is because, yeah, the ADP data came in pretty bad today. You came in at a job loss of negative 33,000 jobs. Last month was revised down from 37,000 jobs to 29,000 jobs added. The expectation today was about 90,000 job ads. So yeah, I mean, complete flip-flop. You were expecting to add almost 100,000 jobs. You lost 33,000 jobs instead. I mean, that's Kind of wild. Challenger job cuts today came in at about 48,000. This was much better than the expected 110,000. Challenger job cuts are planned layoffs by companies. So that was, kind of offsetting the ADP report today. So a little bit of good news. U.S. Agriculture Secretary Rollins says agriculture will benefit from Vietnam trade deal. The FA calls on Congress to investigate Jerome Powell. He says, I am asking for Congress to investigate Chairman Jerome Powell, his political bias, and his deceptive Senate testimony, which is enough to be removed for cause. Jerome Powell's $2.5 billion building renovation scandal stinks to high heaven, and he lied when he was asked about these specifics before Congress. This is nothing short of malfeasance, and is worthy for cause. So maybe there could be growing pressure on, getting Powell out of the Fed and getting someone in the Fed that is a little bit more accommodative, someone that's more reasonable, more or less incompetent to actually start cutting rates. Morgan Stanley said today they expect the Fed to deliver 7 rate cuts in 2026. The Vietnam leader invites Trump to visit Vietnam. Vietnam's leader, Lam, in a phone call with Trump, asked the U.S. to remove restrictions on exports of high-tech products to Vietnam. And in this phone call, he asked Trump and the U.S. to recognize Vietnam as a market economy. And the U.S. will significantly cut tariffs for several Vietnamese products. Vietnam is opening their market for American cars. J.D. Vance has said that, quote, I'd love to hear an argument for why Powell cut rates 50 points right before an election, but can't do it now with inflation lower. Donald Trump says Vietnam will pay the United States a 20% tariff on any and all goods sent into our territory. Trump says, and a 40% tariff on any transshipping. And Trump says we will be able to sell our product into Vietnam at a 0% tariff. He says the United States of America will have total access to their markets for trade. The Financial Times says today that Trump's attacks on the Fed puts the U.S. safe haven status at risk. Goldman Sachs said today that tariffs won't help the U.S. boost manufacturing productivity as tech in American factories continues to lag. Citibank said today slowing activity in the housing sector overall is an early sign that underlying demand is weakening this year. Microsoft announced this morning they will lay off 9,000 workers in their second round of mass layoffs. And Trump is expected to meet with House GOP lawmakers today as they are getting ready to vote on this bill. And 31% of student loan borrowers with a payment due are in late-stage delinquency or over 90 days past due on payments, the highest share ever recorded. Announced today, Vietnam will buy 50 Boeing aircrafts. They will buy $2.9 billion of U.S. agriculture products. And Microsoft is scaling back ambitions for AI chips from NVIDIA to overcome delays. Now, markets are closed for trading on Friday, so that means we get the jobs report coming out tomorrow. Goldman sees the June jobs report, missing forecast. Goldman Sachs expects June U.S. payrolls to rise by 85,000, below the 110,000 consensus. They cite falling federal jobs, Trump's immigration clampdown, and tariffs hurting manufacturing. Goldman also sees unemployment ticking up to 4.3% from 4.24% in May. Now, we missed on the ADP employment report today. The Pulte guy, I'll just call him that, Pulte, I think it's the FAHA, Housing Association. Basically, Pulte is the guy that oversees Fannie Mae and Freddie Mac, okay? Like he's in the government, calling for Congress to investigate Jerome Powell. That mixed with the ADP employment change suggests that maybe we are going to get a bad jobs report tomorrow. Like, what if Pulte already knows the jobs report? Like, a lot of people in government get these reports like ahead of time. What if the jobs report is really bad tomorrow? That could put a lot more pressure on the Fed to, one, begin the process of cutting rates, but also maybe to get Powell out of the top, chair on the Fed. I don't know if that would necessarily be good or bad for markets at this point. Like, theoretically, getting Powell out of there, getting more cuts would be good, but that would add to uncertainty. That would add to what could be volatility. So although I don't think there's like a huge chance that Powell gets kicked out of the Fed before his term ends May 2026, there is a chance that this does start a broader investigation into Powell. Okay, let me see if the camera's still on here. This freaking cat, dude, plays with the camera cords. Jose, you gotta stop. He's like chewing on them. One of these days he's gonna completely break the camera. So if it lights out one of these days and just doesn't come back, yeah, it's his fault. So tomorrow, again, non-farm payrolls last month were 139,000. So you're gonna get a revision to that, probably lower. The expectation tomorrow is 110,000, as we talked about. The unemployment rate is actually expected to rise from 4.2% to 4.3%. Then you have subcomponents here like average hourly earnings, all kinds of different subcomponents, but markets really care about those headline numbers. We also get exports and imports for May, and this will help feed into a new updated Atlanta Fed GDP Now tracker, which July 1st, we did get the latest update, and that is sitting at 2.5%. Now, keep in mind, Q1 GDP was, for the final number, down 0.5%, like in the negative. So if we start to see this GDP number come down, if some of the exports, imports numbers tomorrow are not good, if the jobs report is not good, participation rate is not great, then you could start slipping closer to another negative quarter of GDP and thus a technical recession. We had a technical recession in the first half of 2022, again, largely driven by imports and exports data. So keep that in mind. Now, tomorrow, you also get initial jobless claims expecting 240,000. This has been elevated for a while now. Part of the reason markets are growing a little concerned of what could be a growth scare over the next couple of months. Keep that in mind. That would obviously not be great, but really prompt the Fed to cut rates. And I think tomorrow's jobs report is really just critical for that. What could be July rate cut. We can see markets are currently pricing in around a 25% chance of a Fed cut July 30th. A 75% chance of a continued pause. But if that jobs report is bad tomorrow, you're going to start pricing in a higher chance of a cut coming July 30th. And you might sharply see Fed officials start to get a lot more dovish. Okay. Now, also tomorrow, you will get ISM services PMI. So services PMIs were strong for a really long time. They went below 50 last month, which anything below 50 is contraction. Okay, so tomorrow's expectation is 50.5, would be back into positive territory. Last month was 49.9, so barely contraction, almost, not even like worthy of saying it was a contraction, but technically it was. And the services PMI is something Wall Street cares a lot about because the economy is about 20% manufacturing and 80% services. Okay, basically everything is services. So if you're going to go into a recession, it's going to be services driven. Manufacturing can definitely help or hurt things, but it's really the services when it comes down to it. Business activity, employment, new orders, and prices will be critical for tomorrow morning, especially prices. Prices have went up a lot recently, but really what this is, the ISM, it is a survey of managers in certain segments, like the services, right? So you could get surveyed from the manager of DoorDash, let's say, that says, hey, we see prices going up. Like, is that definitive? No, it's roughly opinion based. But we have seen prices in this component of the survey go up a lot in recent months, as you can see here, the small boxes, they're definitely going up quite a bit. Versus like new orders, employment, and business activity. So theoretically, you want to see employment, new orders, and business activity go up and prices come down. That would be the ideal situation, and the headline number to obviously come in higher versus lower. Now, tomorrow at 11 o'clock in the morning, following all of this data, you are going to get a speech from Fed Bostic. Fed Bostic tends to be one of the more, hawkish Fed members. He's not really a super dove like Bowman or Waller. So depending on the data tomorrow, if it comes in bad, I expect Fed Bostic is going to take more of a dovish approach. He's going to be open to the idea of cutting rates in July, things like that. If everything comes in good, then it's going to be a lot of the same old from Bostic. But yeah, I think tomorrow is actually going to be critically important for markets and whether or not we get that cut coming in July. Now, the percent of stocks trading above their 50-day moving average coming in today at 72.67%, up about 0.5% today. The CNN Fear and Greed Index as well coming in at 63, which is actually down from yesterday's close of 65. So that's interesting. Market momentum is greed, stock price strength, extreme greed, stock price breadth, extreme greed, put and call options, extreme greed, market volatility is neutral, safe haven demand and greed, and junk bond demand currently in extreme fear. Now, the AI Investor Sentiment Survey, the AAII Investor Sentiment Survey, as it's really called, last week showed bullish investors at 35.1%, neutral investors at 24.7%, and bearish investors at 40.3%. So tomorrow we're going to get a new update to this as well. You want to see as many bears as possible. The more bears you have, the better for markets. Now, yet again today, the markets hit a new all-time high. The SPY approaching the 620 level. This is great. Okay, this is awesome. Great news. Okay, you've broken out. You've hit a new all-time high. 4 of the last 5 trading days. We called this out. I pretty much knew this was going to happen at some point. Okay, that's why I was so adamant on the channel saying, hey, this is not the time to fade this rally, not the time to fade this rally. Like, I see a lot of people that are bearish out there that are going to miss out when markets break out to new all-time highs. That's great, okay? You are now overbought on the RSI. That does not mean markets have to slow down just yet. It does mean eventually we will, okay? The RSI on the SPY is at 72.67. Now, what this is showing you is relative strength, okay? So it's relative, okay? Like, sure, this has been a pretty dramatic rally from the low of this market, but relative to the last 90 days or so, you're starting to break out, okay? You're starting to see a lot more upside momentum and less downside volatility. That's what this is really telling you. So I think we can move higher still. Again, I think we move into the 630s on the SPY before you see a little bit of a consolidation, a little bit of a slowdown. That, typically when the RSI gets to the 80s is when you want to play a little bit more defensively in the short term. Okay. Normally it's not in the low 70s. The low 70s tend to be a good level on the RSI for markets to continue to move higher. Once you get to the, again, 80, 81, 82 is when you want to maybe take a little bit of a breather. Okay. I think that could be another 1.5 to 2%-ish on the S&P before you get to those extreme levels on the RSI and you see a little bit more of that consolidation. So I just wanted to point that out there because we have not been overbought on the RSI since really July of 2024. It's been a year since you've been overbought on the RSI, like above 70, which is kind of wild. I didn't even know that until I looked at the RSI on the SPY. Fascinating. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. And as I mentioned previously, if you guys want to come trade with us, come join something that is unique that you will not find anywhere else in terms of looking and seeking out those big winners before Wall Street even knows about them. I'm really not interested in, like, well, I will be when the opportunities present themselves. I'm not interested in, you know, finding these risky small caps that are bad companies that are, you know, going up 50% on a headline. Like, sure, could those do well? Could you do well doing that? Of course. That's too much risk. I found with this strategy, finding these underlooked, underappreciated stocks that are great companies, just not really known yet, you can dramatically lower the suspected risk profile. So again, let me know your thoughts on all of this down below in the comment section. Have a great rest of your day, and I will see you in the next one.